Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Acme with the Bulletin Board Heroes on Friday, the 24th of January. Starting off with 7 Digital, where it's a revisit on what's been a vertical move over the last few sessions. We had that gap through the 50-day moving average, which is normally a decent buy signal, and obviously the end-of-day close earlier in the week above the 200-day moving average at, 0.2 pence or 0.21 pence. Added to the excitement there. Current situation is we've got a best case scenario target here of 0.7 pence over the next, week or two, given the current rate of progress. You've got a stop loss there, or at least a level to watch at 0.44, which was the June intraday resistance. While we're above that, looking for 0.7 pence. If we come back or have an end-of-day close below that, maybe it'll take a bit longer to get up to the nominal target. 98 on the RSI, but that's what you'd expect, an ultra overbought RSI after such a big move. On to the next situation, which comes in the form of Dev Clever. That's spiked up on stake building news, I believe, today. And we've got a situation where the resistance line there from November, I suppose, running through around the 1.2 pence level, broken. And while we're above that line, 1.2 pence, obviously we had that initial target of the 50-day moving average, which was hit. But then one could go, whether the shares could go on to the 2 pence, 2.1 pence area, which is early December resistance, as I said, while the stock remains above 1.2. Stock which has been recommended around the place on a fundamental basis is Ectech, and what's interesting here is apart from the fact that it's taken so long for the shares to base out, we've had that telling gap through the 50-day moving average right in the first session of 2020, so a good start to the year for the shares. Had a sideways move here, but always above the 50-day moving average at 0.138. While we remain above the 50-day line, looking for further progress towards the top of a rising trend channel as high as 0.3 pence. That also ties in with the 200-day moving average at position at the moment. If you're cautious on the stock, maybe wait for an end-of-day close or a weekly close above that mid-January neckline resistance at 0.18. That might just give the shares a little boost once that particular number is broken. On to global petroleum, and here we can see that it looks like a classic momentum trade here. I suppose 2 pence was the level to break that intraday peak of November. It's been a very tedious and extended process of recovery here for the shares, but at least while we're above 2 pence now, looking for for the shares to meet a line of resistance there from the beginning of 2018. That's currently running up at 3.14 pence and could be hit over the next few weeks. Ideally, I suppose we'd have a spike like we've had, or like we had in 2018, both in the early part of the year and later on that year. So let's see if history repeats itself. Stock also helped by the way that both the 50-day and 200-day moving averages are rising in parallel at the moment. That's equivalent to a golden cross, or can be just as powerful as a golden cross between those two features. On to Greatland Gold, which I think I covered a few days ago or a little while back. Looks like a solid situation here in terms of the golden cross that we had mid-month between the 50-day and 200-day moving averages, and now really knocking on the door of the main resistance at 2.5 pence for the shares, which was back at the beginning of last year. Probably one can say that the stock is in a rising trend channel with the top of the channel heading towards the 3.2 pence level, and a weekly close above 2.5 pence should open up the prospect of 3.2 pence relatively quickly. We've had a long consolidation here from March last year, so I think it looks as though the log jam has finally been cleared for this situation. I suppose arguably the log jam was broken right at the beginning of the month with the break of that resistance line there running around the 1.8 pence level. On to a couple of stocks which are not the usual fare here on the Bulletin Board Heroes, but worth having a look anyway. Cape Technologies continues to rise like a demon. Very sharp rising trend channel there from October. Floor of the channel currently around the 170 level. So while we're above that, looking for at least 225, 230 for the shares. Interesting that even though the stock has risen very high, risen to great dizzy heights, the RSI is not that overbought at this stage, just over the overbought stage, but it could be 80 or 90. One would expect it to be at that kind of level after such a run. So a bit of gas in the tank there. On to Kenmar, where we've had a classic triangle break, breaking the 245 pence level, that August resistance line, and while we're above that, looking for the top of a rising trend channel from July as high as £3. The 50-day moving average and the 200-day lines both rising now. As I said, that tends to be a sweet spot in terms of price action for a stock or market. Finishing off with one of the other heroes of the recent past, coming in the form of Petrol Resources. I think it was a suggestion earlier in the week as a potential bullish situation. When it broke that January resistance line there, just around the 6.5 pence or so. Interesting now that we've got the 50-day moving average rising at 12.82 pence, and just looking for an end-of-day close above that, and that could propel the shares quite quickly towards a third test of the 25 pence area over the next week or two. Stop loss at this stage, I suppose, would be just back below today's intraday low, perhaps 8.75 to 9 pence. At the most, but obviously this is quite a volatile situation, so rather difficult to employ money management. That's it from me today. More updates on Monday.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.